Assalamualaikum warahmatullahi wabarakatuh. My name is Abid Umairah binti Asmapi. Today I will explain about the Celcom and Maxis background. First of all, I will explain about Maxis Communication. Maxis Communication Berhad is a major telecommunication provider in Malaysia, offers internet, mobile and fixed line service since 1995. It has grown significantly, covering urban and rural areas. Maxis lead in mobile services and digital service like mobile payment and banking, recognized for its strong networks, innovation and excellent customer service. It also has received numerous awards for its contribution to Malaysian telecom industry. Next, I will explain about Celcom. Celcom is a leading mobile service provider in Malaysia, offering various telecommunication service to individual businesses and government organizations. Also a trusted mobile service provider in Malaysia since 1988. It also offers prepaid and postpaid plan for LTE, 5G technology and digital service like mobile payments. The company focuses on customer experience enhancement and support healthcare education and environmental initiative and has also received numerous awards. Next, let's move on to the strength and weakness for each company. The strength of Maxis company has a strong revenue streams. Maxis has diverse revenue sources including mobile services, broadband, digital services and enterprise solution which provide financial stabilities and growth opportunities. And the weakness of the company is high capital expenditure. Continuous investment in infrastructure and technology upgrade requires significant capital expenditure which can strain financial resources and impact profitability. And the strength of Celcom is the company has technological investment that continuous investment in advanced technologies like 4G LTE and 5G position Celcom for the future growth and can drive increased revenue from new services. But the weakness is it has intense competition. The highly competitive telecom market in Malaysia can lead to pricing pressures and reduced profit margin as competitors view for market share.
In 2020 and 2022, Maxis has the highest current ratio, while in 2021, Maxis current ratio dropped to 0.48%. Among the 5 years, Maxis quick ratio peaked in 2022, while in 2021, Maxis has the lowest quick ratio.
Next, I will be explaining about debt ratio. In 2023, Maxis had the highest debt that indicate reliance on debt, but Maxis managed to overcome the liabilities that shows positive long-term debt trend. For debt to equity ratio, this table compares all the total debt to shareholders' equity. Maxis' highest total debt is in 2023.
2020, Maxis has the highest operating margin. Maxis operating margin in 2023 has the lowest among the 5 years. The above graphic illustrates how Maxis' net profit margin decreases annually.
For inventory turnover, 2019 was the lowest because their products were not sold much during that time. But in 2022, it was the highest. They had high demand for the products. Since 2021, the graph keeps declining. It shows that their sales of goods is not successful. Next is fixed asset turnover. 2019 was the highest, which is 1.6, while 2021 and 2022 it remained constant. Next, for total asset turnover, Maxis improved from 0.41 in 2021 to 0.43 in 2022. This indicates strong revenue and sales.
The above graphic illustrates the yearly decrease in Maxis return on assets. In conclusion, a crucial tool for every company trying to remain ahead of the competition is trend analysis.
Next, I will explain the liquidity ratio of Celcom. The highest current ratio in the chart was stated in 2019 by 0.67, which means that Celcom are able to pay off for their current liabilities using their current assets. After that, their current ratio become decreased until 0.46 in 2023. It shows that they are having a trouble on paying their current liabilities. Based on the chart, the highest quick ratio was stated in 2019 by 0.55, but after that they become decreased until 2023 by 0.38.
For Celcom debt ratio in 2020, Celcom had the highest debt ratio, but then the ratio drastically dropped in 2022 and 2023. It may be facing sustainability challenges. For Celcom debt to equity ratio, the graph shows financing's mix between debt and equity. The highest debt was in 2022 due to financial challenges during that duration. Now, I will be explaining about activity ratio. For inventory turnover in 2019, it was the highest due to strong sales and product demand. But in 2022, it dropped to 13.51. But then they rebounded to 13.82 in 2021. That shows effective sales generation. For fixed asset turnover, in 2019, it was at peak, which is 1.51 because of effective revenue generation from assets. Then it decreased to 0.70 in 2022. This could be less effective use of assets to generate sales. Next is total asset turnover. Celcom total assets dropped initially but increased to 0.75 in 2022 and 0.79 in 2021. Unfortunately, in 2022, it declines to 0.30 because Celcom had inventory longer than before due to poor inventory management.
Next, profitability ratio. In 2019, it has stated the highest of operating margin ratio by 44.73. However, the operating margin become decreased from 2023 by 31.98. But they still can gain profit as their operating margin is more than 1.0. Next, net profit margin. Their net profit margin has stated the highest amount in 2019, which are 22.75. After that, the net profit margin become decreased until 2022, which stated by 11.27. It shows that the net profit margin having a drastic decrease. However, it become increased in 2023 by 12.24, which means that they gain their profit from their sales. Last but not least, return on asset. In 2019, the return on asset ratio has achieved the highest ratio, which were 19.96. It shows that Celcom did greatest in managing their resources to generate profits. However, they become reduced until 2022 by 3.37. After that, it become increased in 2023 by 4.20. It is because they are able to generate profit with all its available assets. In conclusion, trend analysis is an essential task that any business must complete. The reason for this is that trend research can assist the business in continuing to operate at a high level. Celcom can increase revenue while lowering costs by increasing sales.
Thank you to my team members. Hi, my name is Nadia Shamil Yusuf and my metric address is 2024196198. I will explain about comparative analysis. It is a method that companies usually use to evaluate their financial performance. It also exists. Investors in determine which firm is the best to invest. So by comparing both companies, we will evaluate which one had a stronger financial performance. As we can see from the chart, Maxis' current ratio is higher than Celcom. They can handle short-term obligation by using its current asset. Again, Maxis have a higher value than Celcom. So Maxis company can pay its short-term obligation by using its current asset. Next, we have debt ratio. Maxis have stable ratio and start increasing, meanwhile Celcom have lower ratio compared to Maxis and slowly fall in 2023. From the chart, debt to equity ratio, we can see that Maxis is increasing from 1.50 to 1.55 in a year, meanwhile Celcom is constant. Can't deny that Maxis is better in debt to equity ratio than Celcom. Let's move forward to profitability ratio. As you can see the chart, operating margin, it shows that Celcom is more effective than Maxis in generate their profit. Both companies decreased in 2023, but still, Celcom is maintaining at highest point. Celcom is on the lead of net profit margin since Celcom has the highest time on both years. The higher the net profit margin, the more capable the company to generate their net profit margin. The last one is return on asset. This chart also shows how the company can manage to generate their profit by using total of asset. So Celcom is good to generate this profit with all the available assets. Last one is activity ratio. Inventory turnover shows how often the company inventory is sold and replaced during a certain period. And Celcom is moving ahead, even though they left behind with lots of distance compared to Maxis. Next, fixed asset turnover. Maxis is on the lead again. This indicates how well the firm uses its fixed asset to generate sales. Last but not least, total asset turnover. Maxis have the highest percentage. The higher, the more effective company is using its own resources to generate into sales. So Celcoms need to improve their efficiency and increase their sales. So to conclude, Maxis had a better and stable financial performance than Celcom through these 2 years of operation by applying 4 forms of financial ratio analysis.